Something really big is happening right under the surface of the market. I mean, the household names, the ones that have been driving everything for years, they're starting to look a little shaky. And a quiet but really powerful shift is underway. Okay, let's dive into this and follow the money. For what feels like forever, the game plan has been super simple, right? Just buy big tech. But that's just not working like it used to. And this brings up the single most important question you could be asking right now. If the money isn't flowing into the usual suspects, where is it going? And wow, this slide just lays it all out, doesn't it? You can literally see the scales tipping. On one side, you've got the old guard, Microsoft, Google, NVDA, kind of weighing things down. And on the other, you can see where the serious capital is flowing now, into names you might not expect, like TJX, Biorad Labs, and Albarar. We are absolutely witnessing a changing of the guard, and we're going to break down exactly why. All right, so our little investigation here starts with the first major piece of evidence, the decay happening in the market's biggest, most reliable stocks. And look, this isn't just a hunch or a bad feeling. The data is screaming that there are clear signs of a breakdown. Now, what's really interesting here is just how specific this weakness is. According to the data we're looking at, names like Google and Meta aren't just having a bad week. They're being described as structurally broken, stuck in the absolute weakest quadrant. Even the titans Microsoft and NVIDIA are showing signs of near-term exhaustion. The only one really holding down the fort from the old guard is Apple. So the key here is that this isn't just one stock having a problem. It's a broad deterioration across almost all the former leaders. So if the megacaps are faltering, that leads us right to our second clue. We've got to track the capital itself. See, money never just vanishes from the market. It rotates, it moves. So let's go follow the trail and see exactly where it's flowing. And this whole movement, this big shuffle, it actually has a name. It's called cyclical rotation. And it's pretty much the engine driving this entire shift we're seeing. It's really simple. Investors are selling what they think has hit its peak, and they're buying into sectors they believe are about to take off. It's a fundamental change in how the market is thinking. So what's getting sold off? Well, the data shows what's being called a violent rotation away from the traditional safe sectors. Money is just flooding out of real estate, utilities, and consumer staples. These are the places investors usually run to when they're scared, but right now they're being left behind. And this is where all that cash is landing. The money is aggressively piling into sectors that tend to do well when the economy is in a different cycle. We're talking financials, healthcare, and some specific consumer discretionary names. And this isn't a small tweak, you guys. This is a major bet on a whole new phase for the market. And now for the really fun part. We've followed the money from the old guard into these new sectors. So let's zoom in and profile the specific companies, the prime suspects, if you will, that are actually leading this new charge. Now, based on the analysis, these aren't just random stocks having a good day. These are what the pros call high-conviction names. And that's because their strength isn't a fluke. It's showing up across multiple timeframes and different kinds of metrics. They're the real deal. Okay, take a look at TJX, that's the parent company of TJ Maxx. It's described as having perfect dual timeframe momentum. So what on earth does that mean? Well, simply put, it means its strength is solid. It's not a short-term blip. It's confirmed on both its daily and its weekly charts. That makes it one of the cleanest leadership stories out there right now. Next up, we've got Biorad, or BIO, over in healthcare. This one is pretty fascinating. The key phrase here is exceptionally sharp daily velocity. Think of it like a rocket taking off. It describes an explosive, powerful move that you often see right when a new leader is just starting its big run. It's a sign of really powerful early-stage strength. And then you get a really interesting case like Albemarle, or ALB. What makes this one such a standout is that it's in the materials sector, which as a whole has been pretty weak. The analysis calls it a rare, idiosyncratic leader. Basically, it's a rebel. It's forging its own path and completely ignoring the downward trend of its peers. That's a sign of true, deep-down company strength. So let's zoom out just a bit. This watch list really gives you the bigger picture of this new leadership class. You can see all the themes we've been talking about, right? You've got anchor strength and financials with BK, and even a rare tech survivor in Cisco, which is showing real leadership while its bigger tech cousins are faltering. The main takeaway here is that leadership in this market is way more selective and diverse than it used to be. Okay, we've reviewed all the clues. We've seen the breakdown in the old guard, we've tracked the clear rotation of money between sectors, and we've profiled the new leaders. I think it's time to deliver the verdict. And the verdict is crystal clear.
All the evidence is strongly suggesting that this is not a short-term bounce or some temporary fluke. The fact that these new leaders are showing strength across both daily and weekly charts, that signals a durable, significant, and structural shift in who's in charge of this market.
So, to wrap it all up, the entire story really unfolds in 3 simple steps. First, the old guard stumbled. Second, the money rotated out. And third, a new set of market leaders emerged. This is a brand new environment, one that isn't just being lifted by a small handful of superstar names anymore. So we'll end on this final thought. The data is pretty undeniable. The market's leadership has already changed. The real question now is whether our own perspectives, and maybe our strategies, are changing along with it.